Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit. This daily video I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It's currently 7:01 a.m. Central Time, and I am recording this in preparation for market day of January the 12th, 2015. So, a lot of whiplash this last week, and indeed, if you added up all the moves in the Dow Jones, you had about 1,200 points of up and back down and back up and back down. So, quite a bit of whiplash this last week. Bottom line, in the short term, there's not an awful lot of indication as to where this market wants to go right now. We are really quite neutral. Let's dive into the morning reports and see what the situation is as we come into trading on Monday morning. The overnight action, the indices were all uniformly up about 0.5%. Probably the biggest news is crude oil down over 2% in the overnight action. So crude oil again showing significant weakness. Look for those energy sector stocks to take a hit, and that will not help the broad market be able to hold this overnight high for sure. Euro down, not by a lot, 0.3. Gold, not a lot of movement there, up about 0.4. In our overseas action, Shanghai was probably the most active at down 1.7, though Europe has gone a different direction. The DAX is up 1.46 as of the time I took this snapshot, and the FTSE is up 0.34. In terms of macroeconomic reports coming into today, pretty quiet really for the U.S. markets. Nothing of note on Monday. On Tuesday, we do have a JOLTS job openings. It's the orange flag report, and we have a 10-year bond auction. If you're into the bonds, you need to be aware that we have some bond auctions coming this week. There's a 10-year on Tuesday, and I believe on Wednesday is the 30-year. So that certainly will be a mover for that bond trader. In terms of our current market condition, we continue to have significant volatility. We've now had 7 days in a row with at least a 1 standard deviation move in the S&P. You see on the Russell also 5 days in a row, really across all the indices, quite a bit of volatility to start this year. Now, in terms of just how much volatility, the interesting thing is in terms of the historical IV percentile, it's actually been dropping. And indeed, the short-term VIX is now a 15.20. So lots of movement, but not actually going anywhere. And also, it could be said, lots of movement, but not yet scaring anybody. And indeed, in terms of what's happening on the VIX, we've been kind of ebbing off a bit, and there doesn't seem to be an awful lot of fear in the market at this point. Not a lot of put buying on the S&P to drive up that VIX scale. In terms of our market timing opinions, we are really very, very neutral here. We are in still phase 3 bull flag, bull flats, looking to see if we can establish a higher high on our broad market indices. To be determined yet. We have been in a symmetrical triangle. If you look at the SPX on the daily, intermediate term, you'll see that you could draw a symmetrical triangle, and until we really break one side or the other on that, we've just been chattering back and forth. If you look at your market profile tools, you'll see a lot of spikes, a lot of very, very low volume price action, and in general, what you're going to find is that the short-term traders have been largely in control of the price action in recent days, and that's why you've not seen any real significant setups for the intermediate term. Until the institutions come in with volume and indeed Friday was not a distribution day, even though it was a down day, until the institutions come in with volume and help us determine what an intermediate term trend really is. We are kind of left with mostly sitting on our hands waiting for some clearer indication. So as such, we have some divergences in our systems. Our market trend intermediate term obviously is bullish. Portfolio trader posture, we have a confirmed uptrend. Active trader market posture would really, it's been flip-flopping back and forth right around the center point, so this is really very neutral. So if you do initiate new positions on either short or intermediate term bullish trades, consider reducing your position size and use caution in general with new positions until we get something that is more clearly indicative of what the intermediate term trend is going to be. Now, our position sizing models aren't really reflecting this neutrality so much. They're currently calling for 75 to 100% full position size. I would probably override that at this point and say at this point about consider reduced position size until we see a break one way or another and can determine which way we are likely to go in the next leg. Market timing, neutral, both on 1 and 3 day, 2 week, slightly bullish. Market forecast, borderline bearish. This was borderline bullish just as we went into the day on Friday. Now we have borderline bearish. So as you can see, really quite a mess here. NASDAQ is still the most bearish in terms of market posture down here at a 34. The other three indices are really all hugging the 50 center point line and not giving us an awful lot of clear indication one way or another. Hedge warning status is still at a 0+, with 0 being normal. We are in a confirmed uptrend, and in general, most of our volatility metrics aren't firing any particular warning signs. Everything looks pretty good. Really, it just has to do with the fact that our market posture is not indicative really one way or another. We also have this warning sign from the NDX. Our NASDAQ has not put in a higher high, and in fact hasn't been in general stronger than the SPX at all of late, and we really like the NASDAQ to be leading. Along those lines, one of the things that we can look for as to where this is likely to go is watch your XLF. It's very difficult for the broad market to make strong bull trends without the XLF participating. XLF, our finance sector, is perhaps having some weakness play in from the energy sector. Some of the high yield bond participants, of course, are these highly leveraged oil exploration and their related industries. Have got a lot of debt, and there is some concern and some exposure there that some of this high yield bonds could be threatened, and that could interplay across the financial markets if oil continues to fall. And obviously this morning we're looking at oil being again very weak. So there's some play there, but if we're going to truly be in a broad market, bullish market, the financials have got to get some footing and participate in that. Very difficult to see that happen without. And we really are, though, in a no man's land. VIX trend has been coming down of late, but this is really going to be a reflection of which way do we break. Option income strategies, again, assuming that we do break to the long side, and if you look at the intermediate term coming into this, the long term coming into this, we are in that symmetrical triangle, and the expectation is that you would break to the top side and be a trend continuation. So if that happens, the VIX would be expected to continue to come down, and option income strategies would be and continue to be within the volatility window that are conducive to option income strategies. That would work out. failure, of course, would be that we would break out of the bottom side of the symmetrical triangle, and at that point you'd see the VIX spike and option income strategies become quite problematic. And very quickly here, in terms of our market posture by sectors, again, a lot of neutral coming in here. This is really quite messy. Not a lot of indication here, though. You know, the healthiest markets, once again, discretionary, staples, healthcare, though transportation popped into you know, a strong market posture across all three time frames, and that certainly is helpful for the bulls. In terms of percent change, you know what? I don't think that's right. I must have gotten a table wrong. So we'll just ignore that. In terms of industry groups, retail, railroads, healthcare, transportation, and internet are our 5 industries that are leading. And gold miners and coal continue to be down here at the bottom if you're looking for bearish setups. Gold has been attempting to make a breakout, and on Friday's action was peeking its head above a significant trend line. So keep an eye on the gold complex, gold miners, gold miner, the miner golds, GDXJ, as well as GLD. There could be something pretty interesting setting up in the gold complex. As always, greatly appreciate your following us on social media. If you like what we're doing, what we're providing, like us. Feedback can be given through either of the Facebook page or, of course, directly into our email at support@falconglobaltraders.com. Obviously, additional information about the live trading rooms and other products that we have can be found at falconglobaltraders.com. We do have 2-week free trials on any of the 3 live trading rooms. As always, the disclaimers. Hit your pause button if you need more time to review the disclaimers. And as always, we greatly appreciate your participation with the Falcon Global community of traders. Good day and good trading.